Alberta just announced a referendum on separating from Canada. The vote is October 19th. Here's what that could mean for housing prices across the entire country. On May 21, 2026, Premier Danielle Smith announced that an additional question will be added to Alberta's October 19th omnibus referendum. The question asks whether Alberta's government should commence the legal process necessary to hold a binding referendum on separating from Canada. This is not the binding vote itself. It's a vote on whether to start the process toward a binding vote. But the signal it sends to the housing market is immediate. Alberta has been the #1 destination for interprovincial migration for 14 straight quarters. Over 26,000 people moved to Alberta from other provinces in a single year. Calgary alone absorbed more interprovincial migrants than any city in the country. The entire growth story of Alberta's housing market has been built on one thing: people moving in. Now imagine you're a family in Ontario considering selling your home and moving to Calgary. You've watched the videos. You've done the math. Lower taxes, cheaper housing, better job market. Then you see the headline: Alberta is voting on whether to leave Canada. Do you still move? That hesitation is exactly how political uncertainty affects housing markets. You don't need separation to actually happen. You just need enough uncertainty to make people pause. And pausing means fewer buyers entering the market. Fewer buyers means inventory builds. Inventory builds means prices soften. Now here's the reality check. Separation is extremely unlikely to actually happen. The Clarity Act requires a clear majority on a clear question. Indigenous treaty rights would need to be addressed. Federal assets, military bases, pensions and currency would all require negotiation. Even if the October vote passes overwhelmingly, it would only begin the legal process toward a binding vote years from now. Danielle Smith herself has framed this as leverage for negotiating greater provincial autonomy within Canada, not as a genuine path to independence. But markets don't wait for outcomes. Markets react to uncertainty. And right now there are 9 or 10 referendum questions going to Alberta voters on October 19th, covering everything from immigration to constitutional reform to separation. That's more direct democracy than Alberta has faced in its entire 120-year history. For Alberta's housing market, the short-term risk is a cooling of the migration wave. If even 10% of potential movers from Ontario or BC delay their decision by 6 months, that's thousands of fewer buyers entering Alberta's market in the second half of 2026. Alberta already has under 3 months of housing supply. Any reduction in demand would loosen that inventory and take some upward pressure off prices. Calgary's detached home average of 764,000 could stabilize or even dip slightly if buyer hesitation grows through the summer. For the rest of Canada, the impact flows in the opposite direction. If fewer people leave Ontario and BC for Alberta, those provinces retain more of their population. That means more demand in markets that are already struggling with oversupply. Ontario has active listings 50% above the 10-year average. More people staying doesn't fix that, but it slows the bleeding. There's also a mortgage and lending dimension. If separation talk escalates, lenders could become more cautious about Alberta exposure. CMHC and private mortgage insurers assess risk by region. Significant political instability in a province could lead to tighter lending standards, higher down payment requirements, stricter qualification criteria. That would directly affect Alberta buyers' ability to purchase at current prices. The oil and gas sector adds another layer. Alberta's economy is still heavily tied to energy. Separation uncertainty could spook international investors in the energy sector. If capital investment slows, job growth slows. If job growth slows, migration slows. If migration slows, the housing market cools. The chain reaction is predictable even if the starting event is unlikely. Now here's the opportunity angle. If you're already in Alberta and you're already a homeowner, this likely has minimal impact on you. Property values in Alberta are supported by fundamental demand, not speculation. People are moving here for real jobs and real affordability, not to flip condos. That kind of demand is resilient to political noise. If you're a buyer waiting on the sidelines, this could actually help you. Any softening in the market creates more inventory and more negotiating room. The best time to buy is often when everyone else is hesitating. And if you're in Ontario or BC watching this from the outside, the referendum changes nothing about your financial situation. The math on moving to Alberta for housing affordability is still dramatically better than staying in Toronto or Vancouver, regardless of what happens on October 19th. The referendum question itself will likely pass because it's not asking Albertans to separate. It's asking whether they want the option to vote on it later. Most Albertans will say yes to having the option even if they'd vote no on actual separation. That distinction matters. The real impact on Canadian real estate isn't the vote. It's the 6 months of headlines, uncertainty, and speculation between now and October. That noise will affect buyer behavior in Alberta and across the country. Smart buyers will use the noise to their advantage. Nervous buyers will sit on the sidelines. And the housing market will price in the uncertainty the way it always does. Slowly then, all at once, are you still moving to Alberta, or does the referendum change your plans? Drop your take in the comments.